Ventura Cannabis and Wellness Corp operates a drug and alcohol addiction rehabilitation center, serving patients in the United States and Canada. The company offers inpatient and outpatient intensive treatments, including a line of marijuana lifestyle management supplements. While Ventura continues to focus on its traditional services, it is exploring the possibility of expanding its addiction treatment services and product offering in the marijuana space. Ventura Cannabis and Wellness Corp is listed on the CSE under the ticker symbol VCAN.
Jacob Gamble joins me now. He's the CEO of Ventura Cannabis and Wellness, trading on the CSE under the symbol VCAN. Jacob, how are you?
I'm doing well. Thanks for having me.
Great. So you have taken over this company. I started buying stock in this company. Full disclosure, I'm a shareholder of this company. I'm talking my book. I'm not to be trusted under any conditions. But I've got to say, this is one of the first times I bought stock ahead of a rollback, and it's actually worked out for the better.
Yeah.
And so I am looking at what you've accomplished in your 4 short months as CEO and thinking that this is the kind of momentum in a story that I really like to see. After a 7.34 pre-consolidation, you now have 34 million shares outstanding.
Correct.
You've got cash in the bank, and you've got a solid business plan. Tell us about it.
Cash flow. That's in no debt. I think that's the biggest factor. If you take our balance sheet compared to anybody out there on the street right now, we rise above the rest. We are actively acquiring revenue dispensaries, so retail centers and sales centers to gather data. Then our next phase will start where we'll be putting out greenfield expansions, building our own dispensaries, manufacturing, processing, grow operations so that we can be vertically integrated to be able to push all that cost down.
You said revenue dispensaries.
Yes, already generating revenue dispensaries.
Okay, yes. I was going to say, I'd be acquiring revenue dispensaries too. Now, so you inherited a company essentially whose primary business was inpatient and outpatient addiction treatment.
Yes.
And one of the first things you did is you jettisoned the outpatient treatment business and kept the inpatient treatment business. Why was that, and what are the economics of that?
Sure. I think it's kind of a twofold process in there. The outpatient side is very onerous to try to keep profitable. So when we looked across the outpatients that we had, it was a flip of the coin on who was doing well and who might continue to do well or need assistance. And the nexus with moving into cannabis was the kind of front that medicine is moving in to treat marijuana before morphine. So to have cannabis help with opioid addiction or to stop the addiction in the first place. And so the outpatient side makes that a little bit harder to kind of fold together and isn't on the same line as what we're trying to accomplish moving forward.
So is it safe to say that cannabinoids make a superior addiction sort of remedy or treatment than do other opiate extracts like methadone?
Sure. I think it's anecdotally, we can say yes right now. It's interesting you bring up methadone because Stephen Goldner is kind of the father in methadone here in the US and has started a pretty big study to go ahead and prove that in a white paper major way. He did some anecdotal research and saw that yes, cannabinoids have been helping the patients that he was looking at, or the opioid addicts, to stay away from opiates moving forward. And he's also breaking down the cannabinoids to go, if you think about it, to help with sleep, anxiety, stress. And part of that is addiction cravings. So it definitely works into what we're looking to do to develop a strain as time goes on that we can utilize and brand and market.
I've not heard of any other company in the cannabis space approaching addiction so directly with cannabis as the leading sort of avatar for treatment. Are there other companies doing this at this point?
There's no other companies that I'm aware of at this point, but I'm always happy if somebody wants to point me in the right direction to find some synergy. There is definitely a big push in the states. You have major governors, Governor New Jersey, Connecticut, and Illinois, I believe, that have already been pounding the table for doctors to start using cannabis to treat the opioid addiction issue.
Sure. Is it possibly a leap of faith to suggest that the intensity of the fentanyl crisis, the opiate overdose crisis, would be largely diminished had cannabis been part of the pharmacopoeia legally for a couple of decades?
I definitely think if cannabis was looked at more medicinally earlier, we wouldn't be in the situation we're in. Now that we are, let's deal with what we have and move forward.
Sure. Your presentation materials that you recently published suggests that you're still going to continue with the addiction treatment using cannabinoids as a business, but you've also started to make acquisitions in both dispensaries and delivery systems. And tell me about how you're going to diversify your revenue streams.
Yeah, so moving forward, as you kind of alluded to a little bit, where we're selling off the outpatients, we still have revenue coming in from that. So on a kind of a slide scale, as our outpatients over the next 12 to 36 months are divested, continuing to acquire cannabis assets, ones that are revenue producing to start with, dispensaries, basically retail establishments that are up and running, and then at the same time, if shareholders approve for us to go from being a healthcare company utilizing cannabis to a cannabis company that's helping in healthcare, on April 18th, they make that vote, then that'll allow us to actually start more grassroots campaigns and build the whole company from the ground up while still acquiring revenue-based assets.
Now, in the state of California, you revealed an interesting fact that I didn't know, and that's if you have one delivery license, you're actually allowed to deliver cannabis to every location in the state.
Sure, or at least every location feasible to drive to. Yes.
Right. So basically, and there's no restrictions on advertising.
None that I'm aware of.
So one delivery license gives you the ability to compete with every other producer and vendor of cannabis in the state of California.
Sure, definitely.
Wow, see, so I find that really intriguing. You also revealed some interesting statistics yesterday that of all the counties in the state of California, half of them are not allowing any cannabis.
Sure, roughly half.
And within the half that are, half the municipalities aren't allowing any cannabis.
Correct.
So that makes a delivery service even more attractive from the standpoint of an investor. And so how do you plan to exploit that little opportunity?
It's delivery revenue is for the delivery services that are out there, whether it's a retail dispensary that has a delivery license or a standalone delivery license that pulls it straight from a warehouse, is exploding at an exponential rate. And so it's definitely something we want to get in on and utilize. So the 2 dispensaries that we've purchased in the state of Oregon and then the 1 in California, the 2 in Oregon are ready to go and can start delivering. And the restrictions are a little less in Oregon than it is versus California. California, we have to go through a little bit of a process to get approved, but if you already have your retail license, it's basically a pre-approved condition. You just have to show that the vehicle is set to have the standards that need to be there for safety. That ability then is just you advertise. And there's a couple of different avenues we're going down on the advertisement side, but it is not uncommon for some of just a pure delivery service to do a couple $100,000 in revenue a month.
Wow, that's fascinating. Now in Oregon, you've got 2 dispensaries that you've made acquisitions. What do the economics look like on those?
Overall, one we purchased for under one-time revenue and one a little over one-time revenue. Both were very strategic plays to be the first ones. The Salem acquisition, the sellers were very integral in cannabis law in getting it off the ground, and we're the first dispensary and have a long medicinal license practice in that. And so it was giving us a lot of good information instead of having to get it all through a lawyer, and having the on-the-ground ability for them to maneuver as rules continue to change, which unfortunately happens every couple of months. The dispensary in Portland was an acquisition a lot for the actual operator. For the seller, she is an amazing operator. She's what you might want to think of like a Six Sigma lean manufacturing style individual. And as soon as I walked in, I could immediately tell she ran things differently. There is the least amount of steps from purchase to sale. Everything is as efficient as can be, and I'm super excited to have her staying on with us.
Wow, fantastic. What is the criteria that sort of excludes, what are you excluding from your consideration for future acquisition, and what are the hot points of a business that you might consider acquiring?
So the hot points, I'll start there first. If they definitely have some moat around them that they've created, whether they were first in the city and have the biggest clientele, whether they already have their delivery license that's ready to go and we can utilize that, or we come in and see that they're running perfectly fine, but there's an ability for us to optimize cost, purchasing power, taxes, and we've seen that with all 3 that we've been able to look at. The one thing that excludes the vast majority right off the top is they must have 100% above board taxes, billing, all of their finances have to be legitimate. And unfortunately in this industry, and I'll use Southern California as the base example, there's a rampant amount of fake dispensaries that are doing everything 100% under the table. They'll still try to sell to you if you want to buy them, but it goes to sand if you even paid them a penny.
Sure, interesting. Now tell me a bit about your background. You've been a pretty significant cog in a giant wheel in terms of the growth of Fisher Investments, where you spent 15 years, if I'm not mistaken. And that experience exposed you to a lot of healthcare investors, both on the institutional and the high net worth private family office side. So that strikes me again as something very attractive feature of you as CEO, is that getting capital into this company is not something that's going to be a problem. And
I wouldn't put it all on me. Craig Lipsey, our senior financial advisor, amazing deep roots in Wall Street, spent almost 30 years at Morgan Stanley and Merrill combined. But absolutely, I've worked with some major family offices that have nearly $100 billion, all the way down to family offices at $500 million. Started at Fisher in the early 2000s as roughly the 50th employee on the depth chart, all the way up until we had 2,500. Ended up running a couple of different little service lines for them, our institutional business in Europe. The one thing that I loved and I was always comfortable with was being uncomfortable the entire time. We were always growing. I worked out of 11 different offices in my 13 years that I was there. And that's why when I looked at Ventura, formerly Boulevard, there was a huge opportunity for growth here. It was a stagnant company that had not moved. They had a strong balance sheet to basically work with, a blank canvas. And so that allowed us to just jump right in and start moving forward. Along with running it past a few advisors, I'm very fortunate. My closest business advisor is in Texas. She's written a couple of best-selling books on strategy. She's taken 2 companies public on the NASDAQ. So I've got I'm lucky to have a padded group around me to call when I'm confused.
Sure, that's great.
Which hopefully doesn't happen very often.
Yeah. Now, in terms of a war chest for acquisition, you've got 13 million in revenue happening this year, at least. You've got $5 million in the bank.
I'd be disappointed if it was only 13 million happening this year.
Right. So you're not in a position where you're looking to raise money anytime soon.
We're not looking, yeah, correct. So we're not looking, we have 5 million in cash still, we have 3 million in, I'll call leverageable assets, to make up a word, whether it be accounts receivable still coming in, or just leveraging real estate that we own. On top of that, I'm not going to say we wouldn't be interested in raising capital or having the ability, but it would be for the right acquisition, something that would move the needle extremely well for our shareholders. Thank you for being a shareholder.
Yeah.
I appreciate that. Our shareholders have been extremely loyal to the all ends of the earth for the last few years, waiting for something to happen. And I'm excited that they're finally getting information. It's going in a direction they're interested to go, and it's moving forward. And I think if we had to do a large acquisition or a merger and get capital to do that, depending on what it is, as long as it's accretive to everyone, I think they'd probably be happy for that.
Sure. I'm just thinking of your revenue, and typically cannabis companies trade at a multiple of revenue approaching 15x, 14x, call it what you want, but even at 10x, you're trading at a steep discount to that multiple based on what other companies in your peer group are doing.
Yep, don't tell anybody just yet.
I think we're telling everybody. Okay.
I want to be the overnight success, and it takes me a couple more months to get that all cobbled together.
Yeah, fantastic. All right, so we'll keep our eyes peeled for more acquisitions this year.
Definitely, even on the short term.
Okay, great, Jacob. Well, we're going to leave it there for now. We're going to have you back in an appropriate amount of time. As a shareholder, I have to be a little bit careful, but thanks very much for joining me today.
Thanks, sir.